Good morning. This is Larry Edelson for my Uncommon Wisdom video for Thursday, May 13th. This week was off to very exciting markets. We had a major announcement over the weekend, Sunday evening, right before the markets opened on Monday, with the European Central Bank kicking in $950 billion to stop the spread of the sovereign debt crisis from Greece through continental Europe and through the EMU. And virtually simultaneously, our own Federal Reserve said that they would print as much money as needed, backing the European Union with so-called currency swaps to prevent the contagion from going any further. Naturally, the Federal Reserve is fully aware of what's going on, and naturally they do not want this sovereign debt crisis to hit the U.S. shores. Inevitably, no matter what they do, it will hit the U.S. shores. It will continue to fester among sovereign debt and currencies. There's nothing they can do to prevent it. They can stall it. They can kick the can down the road a little bit. But inevitably, these governments in Europe and the United States are flat broke, and the only way that they're able to deal with this crisis, as I've been saying now for the last few years, is to print money as much as possible to try and forestall a collapse. Again, the collapse will occur, but as you can already, many are already beginning to tell, this is going to be a hyperinflationary collapse, not a deflationary collapse, because the value of money is being devalued substantially by unlimited printing. And what we are seeing here is a complete change in the existing monetary system breaking down. That's what gold is telling you, which is now at all-time record highs. I can show you the chart here. This is the chart I've been following for you all along. We broke above the cyclical support resistance line that I've been showing you at 1162 a couple weeks ago, where I told you to add to positions. We are now at $1,244, which is a record new high in gold, a record closing high already seen yesterday on Wednesday, and probably another one coming on here on Thursday. Gold now has the capacity to move to 1,300 and then 1,500. It will not be a straight up move. It looks like a straight up move right now, but don't be alarmed if you see some setbacks. Setbacks will be buying opportunities in gold. Simultaneously, the dollar index, let me flip over to that chart for you. The dollar is strong while the euro currency is weakening. However, the dollar is really not making a lot of upside progress, and that is because the dollar, like the euro, will soon be infected by the sovereign debt crisis. So while it's rallying right now because there's frightened capital leaving Europe, liquidating loans, going into dollars and gold, the dollar is underperforming gold vastly. So that alone is a signal that the dollar's long-term trend, which is decisively down, remains in effect. So I would not be buying dollars aggressively here. The choice is gold over dollars, not dollars over gold. The Dow is starting, of course, to swing wildly as well. We had that incident last Thursday with the technical glitch. However, whatever technical glitch it was that brought the Dow down 1,000 points, the prices at which many stocks traded at that low last Thursday have not been reversed. So for all intents and purposes, it was a real move. And whether the Dow was down 1,000 in reality or 700 in reality, it's certainly a sign of a top that I've been warning you about. I told you to get out of all stocks. The only stocks that you should be in would be natural resources, primarily gold. Gold is going contra the market. Gold shares are moving up quite substantially. Many other natural resource stocks have been sold along with the Dow. However, they're starting to spring back as well. So you can see the move here from fiat and paper-based investments into tangible assets, and it's heating up quite a bit. Oil took it on the chin. However, that should be coming back shortly. We fell back down to 76. I had warned that support was down there in the $76 level. It doesn't show on this chart. I have not updated it. However, the mid-70s to 73 level is major support in oil, and we should see a rally back over $80. Till next week, please stay tuned to my column and my Real Wealth Report. And those of you in my trading services, we're positioned very, very nicely for some aggressive short-term profits. So stay tuned to my issues there. Till next